Dear investors, I'm happy to introduce you in today's video Beyond Meat. Every week I try to bring some new companies. This kind of analysis helps me to get to know new companies, and I can give you some new information, and you can also learn something new from my analysis. So this week, Beyond Meat, this is a plant-based company, and this is a heavyweight champion in growth. It is like Tesla, so everyone likes this company in Wall Street nowadays. Okay, let's dig deeper. So there are some competitors of plant-based food companies. So Beyond Meat is not alone in this field. So Tyson Food, Kellogg, even Amazon on this field, and some other private companies, Impossible Foods and Maple Leaf Foods, Conagra Brands. I don't know these companies honestly. Yeah, also big players. You can see the ROIC, return of investment capital, and earning margin. You can see Beyond Meat in these terms not performing so well. So you can see Nestle, for example, a percentage return of investment capital and 13 on earning margin. So much better than Beyond Meat. Okay, on May 2, 2019, Beyond Meat realized the milestone of successful initial public offering. So Beyond Meat is playing on a big field. So it is a 1.4 trillion industry, and the company want to reshape this industry. We started Beyond Meat in 2019 with a simple observation that you can understand meat both in terms of its animal origin and its composition. By focusing on the latter, the composition of meat, and letting go the former. Of course, they don't want to use any animal in the in the product, so it's purely a plant-based product. So you can see from this chart, we begin with meat composition versus its animal origin, then replicate its core structure and sensory experience. Of course, they want the same feeling as you are eating a real animal meat. On the below picture, you can see some picture about Beyond Meat, Beyond Burger, and ground beef, and also the finished cooked products. So visible and also in sensory experience, sometimes you cannot notice the differences. This is the goal of the company, so they are investing heavily. So there are some advantages of plant-based food. So improving human health, positively impacting climate change, addressing global resource constraints, and also improving the animal welfare, of course. So you can see Beyond Meat invest heavily uh, in development, resource and development. So 10.9 percentage of revenue is invested in plant-based product development. You can see the percentage of Nestle and other companies is much lower, but in nominal basis, of course, this is a much higher number because Nestle and Kellogg's, these companies are much bigger than Beyond Meat. But these investments in Nestle and Kellogg, this is not only going in plant-based food, but from Beyond Meat, everything is focusing on plant-based food development and research. So heavy investment from R&D perspective, and also you can see heavy growth from 2018 to 2019, so the growth was enormous. 239%. Imagine this company is growing amazingly. In 2019 year to date and 2022 year to date, it was 141%. This is a little bit slowing down, but still, this is a major growing company. So we will see if later on we cannot predict the future. Most probably this growth will slow down and maybe new competitors will come up, but we never know what is happening with these companies. So the companies is present in US retail industry, Costco, Target, Walmart, all the major players, and also food services. There are contracts with many food services and also internationally companies like Tesco or Migros. So you can see the price. This is currently around 138 US dollar. EPS, earning per share, this is negative, and therefore price per earning ratio not applicable is written here, would be negative. The 1 year target estimate is $93, so based on analyst estimate, the stock price should go lower. We don't know. So basically never rely on analysis prediction. I think this is not reliable. It is very short-term prediction. So I would not rely this number at all. Okay, some information from Morningstar. Price per book, it's 22. Price per forward earning, this is enormously high, more than 700. This is enormous, enormous. This is a very high valuation. And the price per earning growth ratio is 8. It's an understandable measure, but still it is a high number. But I don't want to go to other numbers. So I did some calculation. You can see in the first line the revenues, the second line the growth. So based on the annual report from 2017 to 2018, the company more than doubled its sales or revenue, and in 2019 it's almost 3 times. So this is enormous. But still, the company is not producing any operation profit, or indeed it's negative. But based on the number of shares and market capitalization, I calculated the market capitalization per revenue. It was 23 in 2017. In 2018, it was only around 9, and nowadays it is 19. This is still very high, but this is the number I can compare because you cannot do anything with the negative profits and price per earning. It's not understandable, so I considered market capitalization per revenue. In the following Y chart, you can see uh, and compared to other companies like Coca-Cola, Tyson, McDonald's, Kellogg, and Nestle, this is still high compared to these companies. So this number based on a Y chart, it's 22. So this number is the price per sales number. So it's 22. So only McDonald's has almost 7 in this valuation metric, and the others are even lower. So for me, this even the price or the sales should double. So at least to be attractive, this company for me should be close at least this price per sale value around 9 or at least below 10. So for me, this company at the current price or current valuation, it's too risky, But you never know what happens with this kind of companies. The market likes this plant-based food company, so the price might go higher, even higher, and the company can produce more revenue. So I don't know what will happen. I don't play this game because the current price for me is too high. So if the price go much lower, then I will uh, evaluate again the company and maybe I invest. But this price is, as I mentioned, this is too high for me. Yeah, thank you for listening my video. I hope I could provide some value for you and enjoyed my video. I wish you a nice day. Bye bye.